What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
Today, I'm joined with Zach Duggar. How you doing today, Zach?
Doing quite well, Dan. Thanks. How are you?
Excellent, excellent. And I did pronounce it right. It's not like Duger or something weird with the.
Yeah, nope, you got it right the first time.
Okay, sweet, great, and that's really especially good because I don't know if you know this, but my very favorite audience member has joined us today. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators, buyers, sellers, investors, all that kind of stuff. Now, why would I do such a silly thing? Well, it's because the SEC, if they turn around and audit you and you're doing private deals, which is what I really need to know as the guy from the internet, you need to have a documented prior substantive relationship, whatever that means. So I have people on to find out what is your core competency, what is your appetite for risk, what exactly are you doing here, so we can figure out if there is any overlap in our businesses. But before we get too into the weeds with the details, Zach, do you want to say a thing or two about yourself?
Sure, absolutely. I'm in Southwest Michigan, been in behavioral healthcare actually for about 20 years. I sold a business and then I've been transitioning into real estate investment over the last year, as well as a franchisee for Salon Studios concept. And I also like to write fiction.
Oh,
So
cool.
there you have it.
Yeah, excellent. I like that. A little bit of personality there. And our first segment here that we go through is motivation. It's finding out why people are doing it. Because after all, these acquisitions, they can take months and there are all sorts of risks involved. So we need to find out what exactly is it that's going to keep it going. But before I do that, I got to say, but wait, check your eight. Zach, if you can look in the camera and if there's a clock at the 8 o'clock, you'll notice like down here, the audience is 5. They might have a big, ugly red subscribe button that they haven't hit yet, and it's really important that you, no, it's just a stupid joke I always do on these interviews, but the reason why I go through the 5 distinct motivations, everybody has their own unique reason, but when I got down to the subject of categorizing them, I found that they can really be reduced to these 5, and so I go through each of these just to find out why my guest is making these acquisitions. First reason, it's not my reason, but it's a lot of people's reason. They are preserving purchasing power. What that means is they've already got a portfolio of assets, and the way they make ends meet is it's from the cash flow from ownership of those properties. And when inflation rears its ugly head, it'll be time to make another acquisition because you don't want to be selling your performing assets. You always want to be acquiring more of them. But the other situation where they'd be making a new acquisition is if there's an asset crash or they can buy at a steep discount, then they'll be picking it up. Again, that's not what I'm up to by making these acquisitions. What I'm doing is because of my tech background. I realized that as a high salary, high wage earner in tech, that I'm paying more in tax than anybody else. Specifically, just so you know, it's the CRM industry. It was actually the ones where you accept credit card payments. So that's the fancy thing about the CRMs that I work with. But again, it hit me. It's like, what am I doing paying all this tax when I can pivot and get rewarded in the form of deployed capital, aka equity? And so that's what I'm up to. But a lot of people, they're attracted to commercial real estate. They hear that there's all this money floating around. And what they are interested in is taking over their schedule. It might be to fast track retirement, or it might just mean, working fewer months per year or fewer weeks per month, fewer hours per week, something like that. And that's why some people are doing it. But those guys are in stark contrast to this next group. This next group, they're just plain ambitious. So they want to buy up their entire hometown. They want to make sure that their great grandchildren never have to hold a day job. That's what they're up to. And they're great to have on your team because they're going to be hustling into their 90s. just like this last group, they're also motivated beyond just themselves. But what they've done is they've found a sector of society, or maybe it's animals or the environment or whatever it is, but they've realized you need a lot of financial backing if you're really going to make a big impact. So that's why they're making acquisitions. So, Zach, of those 5 different motivations, what combination of those describes you best?
Yeah, part of it was that generational wealth building. I have an uncle whose family had started real estate investing back in 19, gosh, it was 40, 50 years ago. So you do the math. But they acquired a lot of assets over time. He's a full-time pastor, doesn't need to actually take salary from his church. All of his income comes through their investments. So generational wealth building was a big part of it for me. And then being able to take what I'm learning and to help others create those opportunities is something that I also align very strongly with.
Yeah, that's a really amazing point that you make there. I like the idea of someone who's a pastor or something like that who doesn't need the financial backing at all, and so that the altruism is a little bit more obvious. I like that.
Mhm.
But my next question, though, it has to do with tolerance for risk. And I mentioned before that some people are attracted to this industry because there's a lot of money involved. But I like to say real estate is the world's second oldest profession. So you got to understand there's a lot of competition, there's a lot of risk. And so to find out that if my guest really understands that, I have them fill in the blank on this question. There are many popular investment asset classes, but I think blank is too risky. It can be real estate or it can be outside of real estate. What's too risky for you, Zach?
The Forex market. I'll tell you
Forex
why.
market.
The
Mhm.
reason is that I early on invested in a person who was trading in the Forex market, and it turned out to be a Ponzi scheme. And so I know that there are people legitimately making money in Forex, Bitcoin, but those are not for me.
I love it. I love it. Yeah, I definitely get that. It's the biggest issue is that if you leverage enough, then the news cycle has more to do with the trends than what is the foundation or fundamental. So I definitely get that. But enough about Forex. Let's talk about commercial real estate. And the exciting thing I have for you in the audience is that in every episode of Chance Encounter, I pull out the Dan Does Deals Core Competency Cube. You can get your own copy at dandoesdeals.com. And because I'm a dummy, I don't even ask for your email address. You can just go there, download it, print it out, and you can practice these different sides. And I want you to do that because that way you can learn how to effectively communicate on the subject of commercial real estate. But in every episode of Chance Encounters, I go through all the sides so that way you can understand how my guest fits into these deals. So let's get started. It just takes a couple of minutes. A repositioner is a person who looks at a bunch of different properties and does a bunch of paperwork. What are they doing with that paperwork, you may ask? Well, there's a fancy word for it. The first thing they're doing is they're underwriting the deal. That means they're doing the math. They're figuring out, is this property even making the amount of money that the seller or the broker is claiming that it is? They got to figure out how to do that. A lot of people just call these people acquisitions people or investors, but I call them repositioners because they're figuring out how to change the property and find more upside. The first place that they're all going to look is by having great financier relations, and financiers are people who only deal with paper and money. If the repositioner can get a more advantageous loan from the banks and lenders in general, that goes straight to the bottom line. Automatically, the business is making more money. So that's one place that they're going to be looking. But the next place that the repositioner is going to look is the operations. They're going to cut the expenses, stop those Benjamins from going down the toilet. But of course, there's a lot more to operations than just unclogging toilets and mowing lawns and collecting rent and all that kind of stuff. And me personally, the contributions that I make, some of them are for marketing, which is important to keep the vacancy rate low. And then the other thing too is I've got a background in automation and managing your contacts. So that means that'll be a much more smooth process if I'm involved. But at the end of the day, operations, there's only so much you can do. So as a repositioner, they've already got it in their head that they're probably going to need a contractor team to do upgrades to the units, to do a value add or renovations. The idea being that the next tenants will be happy to pay more in rent than the previous one. But there's always a hard limit to how much you can actually improve those units. but how nice you can make it before people just can't afford to pay and it won't get a return on the investment. So one of the important things that some repositioners have to do, especially if they're like me, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground. I need people who can be there in an hour or two, because that's not going to be me. I'd still be stuck at the airport in an hour or two. But once the repositioner has assembled this team, they have the property in mind, they turn around to the financier, they'll have some sort of conversation, goes a little bit like this. Hey, I got a property that I want to pick up. It's 350 units and tens of millions of dollars. You don't happen to have, say, tens of millions of dollars that you want to lend us, do you? And the financier is going to have one question in their mind that goes beyond what I've already said, and that is, who is the sponsor? If you have a group of friends, let's say you're a physician, you got a bunch of other physician friends, and you want to take over a 350 unit apartment complex, one problem you may run into is that you won't be eligible for a loan, and therefore you won't be able to leverage, unless somebody in the fold already owns a similar asset. In other words, somebody has to already own a 350 unit apartment complex for you to be eligible for the loan. On top of that, you need a certain amount of liquidity, and then you also need a balance sheet among the owners of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So Zach, as far as you go, what are the core competencies? What are the sides of the die that you're most likely to contribute?
My primary focus is in bringing in capital and bringing in investors to the deal, and then working with investor relations and helping the team to make sure that the equity is raised to be able to get that portion of the deal that you can't get from the financiers.
Excellent, excellent. So then you either have a fund or you do the asset management as
Yep.
the operations piece. Excellent,
Yep.
excellent. So then the next question has to do with the ideal property. And when investors are talking about what are you looking for, what's your buy box, we're really asking about three main things. First one's geography. So where is the property? Which states, which counties, which neighborhood even could matter. Okay, so that's the first one. Second one has to do with the size of the deal. We're talking about multifamily, which means that unit count is going to be the way that we tell how big a property is. And that's because a different size of group, a different type of group will be taking over 15 unit apartment complexes compared to the ones that are doing 150, 350, and so on. So the size is definitely going to matter. And of course, if we're talking about other forms of commercial real estate like industrial or warehousing, then it's square footage, but unit count is what we're looking for in multifamily. The third one though is class. I separate class into two more specific words. The first one's condition. So how old is the building? And is it beat up? Is it, reasonably good shape? Is it kind of no frills, or is it full of luxuries and amenities and all that sort of stuff? That's condition. That's the first version of class. The second version of class has to do with area, is what I call it. And that is referring to the crime rate where the property is located, the amount of traffic where it's located, and the school districts where the property is located. But both of those versions of class, they have the same rating system as in grade school, where you got A plus at the top, and then A, and then A minus, and B plus, and so on. So Zach, as far as you and your team goes, what's easier to say yes to and more difficult to say no to?
Definitely, it's easier to say yes to value add opportunities, C, B class, and 100+ unit range, so we can work with economies of scale.
And then the geography, like which states or
Yeah. So areas that we're looking at mostly are in that southeastern part of the United States. But I've worked with others though that look at really where the deal fits the numbers, and so it can be in other parts of the country as well.
Excellent, excellent. And so then the next question has to do with who you're best suited to help. And honestly, it's my favorite part about commercial real estate is because nobody is all of the sides of the die for any meaningful amount of time. We all are eager to help each other and build more teams and make referrals. But at the same time, we all have our own unique skill sets. So we're going to be better suited to help some people more than others. Me personally, because of my marketing and content and all that kind of fun stuff, is the sponsors and KPs that I can make the biggest difference for. But I'm also frequently on the lookout for locals because, as I said, I'm on the internet. It's not a great place to be, quite frankly. But Zach, if you have any 506B deals going on right now, don't go enticing investors. So if you have any, delicious pastries like donuts or something like that, don't go waving it in front of the camera. It's very enticing. But you can
Right.
say that people who are new, people who want to learn more, like that's all okay. But you mentioned investor relations. That's why I say it. But who are
Yep.
you best? Who are you looking for? Who's best to reach out?
Yeah, people who are just newer or are looking at an interest in this space, or that just they're already aware of opportunities, but maybe are looking for new opportunities that they'd like to get to know new groups, new people that are syndicators, investors in the space, in the commercial real estate space. So
Mhm.
you can add more deals to the table to evaluate.
Excellent, excellent. And then as far as how to reach out, I'm easy to get a hold of. I got a distinct last name, and LinkedIn is the best platform for social media to find me. But if you scan this QR code with your phone, that'll bring you to the FAQs page of 506BME, which is the service that I offer to document your investor relations so that if the SEC audits you, they're going to be looking for that documentation to prove that you had that substantive relationship, you knew who they were, and all that kind of fun stuff. And that's what I have on offer. But Zach, as far as you go, is there a social media channel that's best to reach you on, or a website? How should people reach out?
Yeah, there's either my website, onfirecapitalgroup.com, or LinkedIn would be another good alternative.
Excellent. And then the last thing I have, it's actually not for you, Zach, it's for you in the audience, which is it's like a public service announcement. If you've been watching this video and you've been experiencing like searing pains in your eyeballs and like migraine-like symptoms, it's probably the hideous red button that's over there. It says subscribe on it, and it's free to get rid of it. You just click on it and then it turns gray, and then like none of that'll happen. And full disclosure, the reason why I want you to do it is because if enough people hit it, then YouTube will start to pay for these videos instead of me. And that would be amazing. So, and it doesn't cost you anything. All it means is my videos might show up on your list of suggestions, but you can go ahead and ignore those suggestions because I just appreciate the fact that you spent this time with me. Just like Zach, I appreciate you joining me today. This has been great getting to know you a little bit
Absolutely.
better.
Definitely, Dan. Thanks for having me.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.